Good afternoon to everybody present here in this event today. Today we are fortunate to have amongst us, in fact, he is the speaker for today's program, Mr. Manish Kumar Singh, Chartered Accountant Mr. Manish Kumar Singh. I will give a very short introduction to him because the short introduction is itself, sufficient to describe his, achievements. He has been a scholar from St. Xavier's College, Calcutta, and he has done his chartered accountant apart from his normal studies, and after that he has worked in the corporate world for quite some time, starting with ITC, followed by TCS, and currently he's in M6 as an assistant manager. And he happens to be a capital market enthusiast and an influencer and a trader. Today he is going to speak on a very important topic. What is the topic? The topic is Introduction to Financial Markets, Reading Books and Following Global Trends. I think this is the call of the call of the day, because each one of us would like to make money out of the capital market but don't know how to do it. That is a big problem with us, and maybe the other way around also. We know too much, which comes to be of no use when we actually trade in the market, because most of us tend to be losers in the market at the end. So that is another problem. Without knowing the market properly, without taking expert advice, if somebody goes into the market and does trading, what happens, all of us know, okay, including the person who is speaking in front of you right now, because I have also singed my hand. So I'm well aware about the risks of the capital market, and would like to advise others. So please don't do it yourself, okay, unless until you are properly trained for that. Otherwise, you must take the help of experts like Mr. Singh. So today I will not mince any more words and not spoil any more time, and would like to ask Mr. Singh to please start with his presentation so that everybody gets benefited with it. Mr. Singh, please.
Thanks, sir. Thanks for the introduction. What you have rightly pointed out is that financial market is a place which is lucrative to everyone, and everyone wants to enter into financial market and earn some money from it. But few basic things itself is not very clear to most of the people. So what I will try to do in this presentation is I will try to explain few of the points which will help you in starting your journey in financial markets, and will help you start learning slowly and steadily. And then once you have an expertise and once you understand how things are working in stock market, then you will be able to decide whether you want to work in a stock market, or invest some money, or do some kind of trading or investing in stock market. So let's start the discussion. As I will first start with what are financial markets. So in India, broadly, financial markets can be categorized into three parts: stock markets and mutual funds. Mutual funds are basically that kind of money those which gets invested into stocks itself. So what is stock? Stock is basically an ownership right of a given company. So somebody says that he has 100 shares of Reliance, means he holds 100 shares of Reliance, and the total number of shares Reliance has can be in crores, of which he owns 100 shares of Reliance. So it can be a ownership right of 0.001% or something like that. So basically stocks are holding or ownership right of a company in such a way that all the stockholders are benefited out from the stocks in two ways: one by getting dividend, the other by getting stock value appreciation. So for example, I will give you an example why stock markets became so popular during corona days. Was because a company like Reliance had a stock value of around 800 rupees. Currently it is around 2300 rupees. So in 2-3 years time, the money has almost tripled. So that is one example that how one can get benefited from stock market, that if your stock selection is right, the moment stock value appreciates, you are earning from that stock value appreciation. In addition to that, usually all these big companies they tend to give some kind of dividend to their shareholders. What are dividends? Dividends are basically part of their profit which they decide to allocate it to their shareholders. What does mutual fund get? Mutual funds are basically, say, as sir rightly pointed out, that not everyone has expertise of investing into stock market. But if I want to invest in stock market without having any expertise, I can invest through mutual funds. What are mutual funds? Mutual funds are basically uh, accumulation of funds which gets invested into multiple stocks. So say for example, if somebody is buying a mutual fund, that he pays 500 rupees for investment. Mostly these can be small as 100 rupees also. So if you want to invest 100 rupees also in stock market, you can invest through mutual funds. So I will take an example of 1000 rupees. So if you are putting 1000 rupees into the mutual fund, so if you have decided to put it today, tomorrow the mutual fund manager who has received your fund will buy stocks worth 1000 rupees, and like you, around 100, 200, and 1000, 2000 people in India would have bought the same thing. So suppose he has collected 1000 rupees from 100 people, so in total he has 1 lakh rupees to invest today, and his mutual fund, he has apportioned the money into 10 stocks. So what he will do is he will invest those 1 lakh rupees into 10 stocks, and then he will bind them into a unit, and that unit will get allocated to normal people. So mutual funds basically are accumulation of funds getting invested into different stocks, and those stocks are owned by the mutual fund, means they have the ownership right of that stock. But whatever is the benefit, so stock value appreciation or the dividend which I explained in the beginning, will get passed on to you. What does mutual fund gets by doing all this? They usually charge an expense ratio. It can be as low as 0.1% also, and in some cases can go up to 1% also. So that is what they get from your investment. But whatever is the value appreciation of stock or the dividend received is passed on to the eventual customer. So even if you don't have any knowledge, you can invest through mutual funds, and you would have seen the ads also, mutual fund sahi and all. It's basically that only, that even if you don't have any expertise in stock market, you can invest in stock market through mutual fund, and if there is a stock appreciation, you will get benefited from it. If there is a different, you will get benefited from it. And in addition to that, out of 7,000 stocks that are listed in India, you don't have to burn your head in understanding that which stock I should be buying. It will be mutual fund manager who will decide on based on his experience and his expertise, that okay, I will buy these stocks. What are commodity market? So commodity market, I will explain you in a simple terms, that uh, either you are watching this video on a mobile or on a laptop, right? Everything which we have in our hand or which we are using is basically commodities. Now, why commodities market are related to financial markets is because in commodity market, everything gets traded in finance only. And in India, these days, gold, silver, crude oil, everything gets traded. So that is basically commodity market. Bond and debt market. So what is bond and debt market? Basically, say I am a risk averse investor, means I don't want to take risk of stock market because stock markets can crash also, like it did in Corona's time. But I am a safe investor and I don't want any depreciation in my investment. So what I can do is I can do an FD, I can do I can purchase a bond which guarantees a fixed rate of return, or I can invest into debt of other companies. So what is debt market? Debt market and bond market are technically two different things, but of the same view, that they take money from people and they guarantee a return, that okay, every year we will be paying you 6% or we will be paying you 11%, depending on what kind of debt it is. So debt market basically in India, if it is issued by corporates like big corporates like HDFC Bank or Reliance, they issue debt to normal people. And if those bonds are issued by corporate houses, it will be regulated under SEBI. But there are bonds issued by RBI also. So if you want to purchase government securities or T-bills, RBI will tell you, okay, for 91 days we will pay you 6.6, 6.6, 6.8% annual interest rate. So for that 91 days period, you are buying a T-bill. That T-bill interest is basically regulated by RBI. So bond and debt markets are in India are regulated by two regulators, depending on who is issuing it. If it is issued by corporates, it will be regulated by SEBI, and if it is issued by banks, it will be regulated by RBI. Commodity and stock markets and even mutual funds, they are regulated by SEBI in India. Now I'll come to the next slide, that what are the resources to track financial markets. So in a general term, if somebody wants to track stock markets, few years back it used to be through only newspapers or few channels. But since smartphones have come in, every information is available over the internet. There are few portals from where you can learn things for free. So I will point out those 2 3 places from where you can track the stock market. In case you want to learn about stock market, you can learn about it. In case you want to understand about a company, that what is its revenue, what is its profitability, how much it has grown, how much it has reduced. So everything you can do it from these platforms. So first app I will point out is investing.com. It is a website also, and it has an app also. In this app you can track all the stocks globally. You can track all the major news that is happening around globally, and you can track any financial instrument. It can be gold, it can be silver, it can be crude oil, it can be bond yield of India, it can be GSEC rates of India, it can be stocks like Reliance, TCS. You can track Nifty Bank Nifty also in this. So this you can do it. So in you can track each and everything from investing.com, and whatever financial products are listed globally, you'll find it over here. In addition to that, in case there is a major event, it will have a separate column also which says calendar, and in calendar you can track what are the major economic events that are happening today. So there can be a meeting in US which has a great economic significance. We can have a RBI meeting also which has a great economic event. uh, we in India we publish monthly GDP data, monthly inflation data. All these data gets published. Everything can be tracked over here in this app or website. You can download the app also. You can use the website also, investing.com. Then the next two apps are for general investors. It is completely free to use. For somebody who is an advanced level person who wants to do something else with all else also with their stock market journey, then they can go for the subscription and all. But basic details of all the companies is freely available in these apps: ticker tape and stockage. So in case I want to check how has been HDFC Bank performing for last 5 years, so what I can do is I can go to this app, either of the apps. I will go to financials. I will check, okay, every year revenue has increased, every year profitability is increasing, so it still remains a good company. uh, I will keep checking on other companies also, and whatever details I need: who are the shareholders, what is the percentage of shareholding owned by which person, is there anything that is happening different in these companies. Then the other thing, what has been the stock price trend, and basic details related to fundamental analysis and technical analysis will be available in these two apps, ticker tape and stockage. Basic is free for everyone. Then there is this app called Bottom Street. So there are small discussions and small memes and everything that gets shared, and then also important tweets of individuals who are popular in stock market. Then any financial information that have any significance. So everything gets figured in this app called Bottom Street. It is a very new app. The founder is known to me. He has just launched the app so that every small bit and pieces of news and all the other details, it gets reflected at one place for a user. So news, small bites, and for small discussions and all those things, you can refer to this app, Bottom Street. Ticker tape, and for this, for company details, and investing.com for everything else. Exchange websites. So in India, three major exchanges: NSE, BSE for stock markets, and MCX for commodity market. They have lot of details on their website. In case you want to check a stocks price, in case you want to check any disclosure of the company, you can go to these websites and you can check them. In MCX, if you want to check what is the gold price today, most of the jewelers in India, they refer to the MCX price of gold. What is MCX gold price today? So they refer to that, and they keep on tracking throughout the day, because gold prices, they keep fluctuating throughout the day. So most of the jewelers, they are tracking gold and silver prices from MCX website. Crude, what is happening around the world, why our petrol diesel is getting expensive day by day. Of last 6-7 months, because of Russia, we are getting cheaper oil. But what is happening, and if the price trend is up or going down, all these things can be referred from the exchanges website. Plus they have so many other details also on their website. They have so many learning documents also on their website. If you go to their learn section or resources section, you will get to learn so many other things. Then we have newspapers like Economic Times, Mint, Hindu Business Line, etc. So there are so many newspapers, of which popular ones are these three. You can track these newspapers also, whereby you can easily learn and get insight about what is happening around stock markets and what are the important things that is happening currently in the stock market. Then what are the main things that are tracked in India by global investors and by Indian investors? So first is Nifty. Nifty 50 is basically considered as barometer of India. So if Nifty 50 is doing well, it is considered that stock markets in India is doing well. What is Nifty 50? Nifty 50 is accumulation of top 50 stocks in India. Top 50 stocks, it includes companies like Reliance, HDFC Bank, Kotak Bank, Infosys, TCS, then Wipro, all these Tata Motors, Maruti, all these major companies. You name any top Indian company, if it fits in the top 50 criteria, it will be there. So Nifty 50, and if top 50 companies of India are doing well, it is considered that in a general, India is also doing well. So that is Nifty 50, and it is tracked by global investors. Then you have the oldest index of India, Sensex. It consists of top 30 companies. Since Sensex was formed much before Nifty was formed, it only had top 30 companies. It again includes almost similar companies, but only top 30 will be there. Then gold and crude oil rates. So globally, gold rates are denominated in dollars, but in India, there is this effect of USD and INR. As in, all of you must be knowing that around a year back itself, dollar used to be around 72 rupees, but today dollar is around 82.5, 82 rupees, right? So dollar rate has decreased in India. Now globally, since gold is denominated into dollars, you have to multiply the dollar rate to get gold rates in India, and then there are taxes and other component that gets added. So even gold rates of India are tracked, because India is one of the major consumers of gold across the world. Then crude oil rates, again, uh, every day there is this new rate of petrol and diesel that gets published. How that is getting published? It in India, usually it is last 15 days average of the global prices. So if global prices have been muted for last 15 days, in India the prices will remain flat or will increase or decrease by a few paces. But if global trend of crude oil is very high, then if crude oil prices are rising very fast, then in India, petrol, diesel, and other prices will keep on increasing. Similarly, your transportation expenses, your all the other expenses, even for the products that we are buying, the cost will go up because the crude oil prices are going up. That will shoot up the inflation. So these are few main things which are tracked in India. Then there is this GSEC rate. GSEC rate is what? government securities rate. Government securities are what? The bonds and the instruments issued by government of India, which is basically a fixed return assured by India to the global investors. So RBI, it lends and borrows to the bank, but government of India, it can issue bonds to global investors also. And currently the GSEC rate in India is around 7.1, 7.2%. So if a global investor wants to invest in India and he wants in FD kind of return, he doesn't want to invest in stock market, he can invest in government securities also at a fixed rate of return. Say for example, he is buying a 10-year GSEC yield, means that GSEC or government security will get matured in 2033, and for all these years he will receive a coupon rate of 7.1, 7.2%, whatever is the prevailing rate at which he has bought that GSEC. Then USD INR, what I've explained you, that USD INR, how you, many people will say why our currency keeps depreciating. So in India, there are two reasons for currency depreciation, two major reasons. There are other reasons also, but two major reasons that are there for Indian currency depreciation. First reason is that in India, most of the exports that are happening is basically the exports of IT services companies. So companies like TCS, Infi, Wipro, they are serving clients of US and Europe. From there, they are receiving payments in dollar. So if a dollar decline is systematic, it means the value of dollar is decreasing slowly. So if the value of dollar is decreasing slowly, as in that last year it was 72, today it is 82. So same amount of money which Infosys used to receive, say for example, last year they used to receive $1,000 for one particular assignment. So if you convert $1,000, it will come to 72,000. This year the same dollar value is 82,000. So in India, you will be able to in India, then you will be able to pay more salary to your employee because you have received more amount of money for the similar value. So most of the exports in India are basically because of services, and because of that, there is a systematic decline that government has been allowing USD INR to happen. So this is one major reason. Second reason is we, in terms of import, we import most of our crude oil from outside. For that, we have to buy US dollars, and since we are buying US dollars, we are paying more money to buy. And because of this two reason, that intentionally it is being allowed. Additionally, since we are buying, we are pushing up the prices of dollars in terms of INR. So USD INR rate is also tracked because it impacts all the imports and exports that are happening in India. That what are the books that helps you understand financial market? First, The Intelligent Investor by Benjamin Graham. Many of you would be knowing the name of Mr. Warren Buffett, but who was the mentor of Warren Buffett? So he was this fellow, Benjamin Graham. It is one of the most popular books in stock markets, and probably if you are able to find it well, you will find a PDF copy somewhere for sure, or else you can buy it from any of the portals available. Then Psychology of Money from Morgan Housel. What Psychology of Money explains you is not that how you will become rich or how to identify company or things like that. But what this book explains you is that if you have money, how will you manage that money? Because having money is one different thing and managing it is another thing. So if you are not able to manage your money well, you won't be able to keep that money. And it is said that if you are not able to manage your money, you will lose everything. In addition to then there is this book called Investing in India by Rahul Saraugi. So he has explained the Indian context of how you can invest in India, in Indian companies, understanding Indian context, and then generating a return from these companies over a long period of time. Then you have this books which are published by NISM. NISM is National Institutes of Securities Market, which is basically a autonomous body under SEBI. Then you have NCFM and many other reading materials from the exchange website. So in previous slide also I had pointed out that all the exchange websites, NSC, BSE and MCX, we have something on our portal for people to learn. If you want to learn about anything in detail, you can go to these websites and you can learn from the reading materials that are available on our website. Then what are the technical tools that helps you understanding the trend in the market? First is moving averages. What are moving averages? Basically, moving averages, say if I am saying 10 moving average, means of previous 10 candles. So what are candles? I'll just take you to the next slide. So each bar which you are seeing over here, green or red or whatever is the bar color, each bar is one candle. So if I'm saying 10 moving average, means previous 10 candles, average of previous 10 candles. If I'm saying 20, means average of previous 20 candles. So if moving averages indicate that the trend is on the upside. So if you see this current slide, you will see moving averages, they are slowly going towards the upside, means the trend is on the upside. In the morning, if you will see that the moving averages were coming down, means that the trend was looking on the downside, right? So you can understand trends from there. Then you have this MACD, moving averages convergence and divergence, means whether moving averages are coming close to each other or going far from each other. This is basically moving averages, convergence and divergence. It at times helps people in understanding the trend, and it helps traders also in trading. Then you have something called super trend, which is one of the latest indicator that is available in the market. What is super trend? Super trend is basically uh, one kind of indicator which takes an average of last few candlesticks. Each green and red bar over here is a candlestick. So based on these candlestick patterns, it helps you judging that whether the market is in uptrend or in a downtrend. It can be for a particular stock, it can be for a particular index, it can be for any financial product, it can be for gold, it can be for silver, it can be for crude also. But it helps you in judging the trend based on the previous candlestick patterns that has happened. And how to learn all these things, you will get so many details about it. If you start googling it, just go and google it. There are many videos on YouTube also where you can refer all these things, and that will help you learn about all these things. So I hope you would have enjoyed the session, and then I will conclude the session over here. And I hope it would have helped you in learning few details and few things about stock market. In case there is some other details, or in you people want to learn something more in detail, then you can obviously contact Mr. Day, and he will be in, if required, he will be calling us again to learn few things together. Thank you all. I'm closing the presentation.